Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Patty Cohen of Compass Realty. Mark Hanf and Namfon are off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. And that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Those certificates are worth over $100, so listen for these trivia questions. The theme is miscellaneous trivia. All right, Patty, we're going to start off with you. Tell us what's the latest in real estate. Things are going crazy, aren't they?
Oh, wow. Oh, I just feel like a broken record because every time I'm on, but it's even more intense than it was before.
Yeah.
Where people are bidding, 15% over asking, whatever, I've never seen it like this. In some ways, it feels a little bit funny that it might shift, but it's still really strong. And it's based on very little inventory and lots of buyer demand.
It's interesting. As a company, Pacific Private Money has seen like an overabundance of requests for loans. So it kind of that fits in hand with what you're mentioning. The interesting thing too is trying to get, you talk about inventory of houses, just trying to get inventory or purchasing of appliances and lumber and everything. Everything has gone through the roof and is delay.
Yeah. The lumber thing is, there's something, a lot of our lumber comes from Canada.
Oh.
And they're dealing with a lot of issues regarding lumber. But yet I was talking to a very, very dear friend who's a very smart builder. And he was saying, are you kidding me? Lumber is stockpiled. It's sort of just wait. I don't understand. Maybe it's the pandemic with something like that. So it's something I personally want to look into a little bit more.
Yeah.
But you're right. Like you can't find ordering anything. It takes a long time to get there.
Yeah.
And so in a way, people just want easy. They just want to why would I want to build or remodel right now?
Yeah.
Right? The cost, the hassle. Let me just buy something.
Exactly. That's kind of what I was getting at is just with all the delays and the increased costs, it just seems like, just buy an existing house.
Yeah.
Yeah.
And then Pacific Private Money being busy makes more sense than ever.
Yeah.
Because I've never seen this, but buyers, I've never seen it, but like the percentage of transactions that actually close that have 0 contingencies are very, very high. And, all the inspections are done up front, so that's fine. But even if you have a loan, you just waive the contingency. So you want something like Pacific Private Money to be in the background, or you just do it that way, or even just to compete. You just want to make sure you have that in place. So it's amazing. I don't know.
Yeah, there's a client who came who wants to buy a property in Northern California, and she wants to pay all cash for it. She doesn't have all the cash, and she's got a lot of equity in her current house. So what she's doing, typical situation, she's actually asking and going to qualify for 100% financing on the purchase because she has so much equity in her current house that she's putting up both properties as collateral.
Oh, that's perfect.
Yeah.
And try and like if you don't have pristine credit or you don't have income to show, try going to a bank. Yes, you're going to get a higher interest rate, but you're also going to be able to pull it off. A bank won't touch you.
Which is interesting because, again, from a bank's perspective, they don't really care that much how much equity you have in your current house because they have to look at, from their standpoint, the ability to make the monthly mortgage payment. If the person doesn't look like they can make it too easily, then they're going to have an issue with the FDIC insurance and then the Fed and the reserves. So that's why they don't want to touch it because they're not in the position to say, oh yeah, no problem, we'll just take your house. And it's terrible for them to do that because of the reserve requirements. It doesn't make sense for them financially. Exactly. But to get a private company like Pacific Private Money, and they don't necessarily want to foreclose on someone's house, but they're not afraid to do it.
Yeah.
So
and there's so much equity in it.
There is. I mean, we're talking about a loan to value of probably less than 50% total. Yeah.
Wow.
So there's so much equity in this in the current house that the borrower, she's going to go to family if she needs
Yeah,
hey, help me make the mortgage payment for a few months while I sell my house,
exactly.
type of thing. So
Exactly.
it definitely
Bridge
does.
loan.
Yeah,
Yeah. I
typically
mean,
bridge
and
loan.
most people, well, not most, but a lot of people cannot afford, or no, would not qualify for the house that the mortgage they're in right now. I
Oh,
mean,
that's a good point.
yeah,
Yeah, yeah,
most people in the Bay, a lot of people in the Bay Area work for themselves, and so you know
yeah.
how taxes come out, and then what that bottom line looks like. And I mean, I couldn't qualify based on my taxes for
Yeah.
what I have now. So
Well,
there's,
and it's funny because I just refinanced my first mortgage, and I think I mentioned this last week. I mean, I know what the bank needs, right? So
yes,
I give them a perfectly filled out file ahead of time, and I started my process January 19th, and I just finished. It just closed last week.
oh my
Took
God,
3 months, more than 3 months. Took more than 3 months to close. And it's just, delay, 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 and
yeah.
this, that, and the other thing. And it's not like it took that long to get the appraisal. So it wasn't the
No, the appraisals are
appraiser.
really quick,
Yeah.
really
I mean,
quick.
I was very impressed with how fast and how accurate the appraiser was. So it wasn't even delay because of that. And
Well, and you can also imagine people that didn't have a file as pristine as yours, they're taking 6 months. But
yes.
here's the other
Yeah.
thing. Well, just a quickie on appraisers.
Yeah.
I'm finding I have a lot of escrows right now, and I'm finding that the banks are waiving appraisers. They're just waiving
How
them.
can they?
Well, I mean, one's a condo. You can do the math. Looks fine.
Yeah, but I mean, with FIREA and all those rules, I'm surprised they're even allowed to do that.
But yeah, I'm finding it. I'm
That is
finding it.
surprising.
Maybe
I
it's
don't
just
know.
such a no-brainer and it's priced correctly. I don't know.
But still, even with a no-brainer, I don't know how legally they're allowed to do it. We'd have to get a
Yeah.
banker on here. We're going to cut to our this is
Okay.
quick, fast first segment.
Really
All
fast.
right, and remember, you know the rules. If you know the answer, Patty, don't say anything till we get
Okay,
back.
well, we don't have to worry about that because I usually don't.
No, you'll know this one. All right, first trivia question: what were the two sides of World War II known as? You know that one. See, I knew you know that one. All right. Call 888-912-1190. First caller with the correct answers to win that tanning certificate. All right. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Patty Cohen of Compass Realty. Mark Hanf and Nam Phan of Pacific Private Money are off today. All right. First trivia question is, we're talking miscellaneous trivia. Here it is. What were the two sides in World War II known as? The Allies and the Axis.
Okay.
And I guess I think that I can't remember how they got access. Something about like it's an access between two, something like that. Anyway,
Yeah.
and so Germany and Japan were known as the Axis powers. All right, Patty, we got an email from a listener that says, "Does it make any sense to wait for a real estate bubble to collapse and then try to buy a house?"
Well, you know, that is a lot of people are talking like that, but they're not necessarily on either side. They're wondering, and that is the question of the moment. But let me tell you, when I was hearing it more last year.
Oh yeah.
Now, it's arguably prices went up 19 to 24% in the past year. So what if you, well, I know a lot of people that sold last year because they wanted to step out of the market because they thought it was peaking.
Okay.
And I love this question because, okay, here's the side for yes, we're in a bubble. We're overdue. You know, as of about 2 years ago, it was the longest period of economic prosperity. So we're overdue. Prices shot up really fast since 2012, blah, 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 right? Is it sustainable, right?
Okay.
Here's the case why we are not there yet.
Yeah.
People talk about interest rates going up. Well, we all remember 10%. We all remember 18, 20%. You know, if they go up a little bit, it doesn't matter. But okay, now there's so much talk about inflation. Well, real estate is the hedge against inflation.
Yeah.
That means prices are going up. So interest rates, blah, blah, right?
Good point.
The other part of it is a little bit about the lumber situation and getting things done. It's just better to buy. We still have the least amount of inventory ever.
Okay.
and we still have unrelenting demand, and it's already
Okay.
almost
Hey, let
June.
me ask you, did people think one of the reasons for the bubble potential last year was because of COVID? They just were concerned about,
Um, I think so, but also, yes, 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 but also just, it's time. It's how is this sustainable? Now, here's the other one that people aren't talking about, but we've been talking on this station a lot of times, like, where's the millennials, right?
yeah,
Because our parents' generation, our generation, we buy at a certain age and it was much earlier than, and the millennials are just sitting out. But like,
yeah,
has anybody thought about what the millennials are, when are they ever going to buy? They're going to buy someday, right?
sure.
So there's sort of that expression like the millennials are already late, always late.
Oh, is that
So
right?
they're late in getting their jobs, they're late in getting
Oh,
out of the house, they're late, they're late.
yeah,
So they're also late on buying houses. And millennials are out. So that's fueling all that demand.
yeah. And
Um,
I mean, at this point, the millennials are having kids of their own, and they don't want to be in this little 2-bedroom apartment, right?
exactly.
And they're making enough money where, I think maybe the fear that their parents had gone through the Great Recession from, 2008 to 2013 is maybe behind them,
Yeah,
and so they, people have kind of a short memory when it comes to stuff like that.
it does. It's
Yeah.
true. But when you think about all of those things, like we're not
Yeah.
there yet.
Well,
And
also,
like maybe we're going to have one more great year,
yeah.
but we're not about to dive right now. It's
Well,
just not.
hopefully the banks are still at least lending somewhat conservatively. That's what gets scary is when the banks give money out like water, and then anybody just says, "Oh yeah, sure, we'll buy, and it's not based on anything, and then I could see a bubble happening. But all the other reasons you mentioned are totally make sense as to why, lower interest rates, people still have decent jobs, and
Yes.
now that if I'm not mistaken, didn't the CDC just come out with, if you're fully vaccinated, no masks
Yeah.
are needed indoors either?
This just
Holy
in.
smokes.
It
What's that
happened
going
a
to
few
do?
days ago. This
Yeah.
just in, right? So
Yeah.
that's big news. And I think the stock market immediately went up too.
Yeah, it did. And we're recording the show on Thursday, 2 days before the show actually airs on Saturday, and it was up quite a bit.
Uh-huh.
Which is interesting. We mentioned about the stock market. So Bitcoin dropped quite a bit because they say because Elon Musk tweeted about not being able to buy Teslas with Bitcoin. He was thinking, I don't know if he actually said, sure, you can buy Teslas with Bitcoin before, but he suddenly says now you can't do it. And didn't he say,
Interesting.
yeah, didn't he also say like Dogecoin was a joke? I mean, he invested in or something, but it's like, I don't know. Yeah. You know what? I'm okay about saying I missed the boat on not buying Bitcoin when it was
I missed it.
5,000. I'm perfectly okay with it.
Me too.
There's other alternatives. And I just, what I don't understand is, I mean, why can't Patty and Edward get together and we'll call it the Patty Edward coin, right?
Exactly.
Suddenly, boom, everyone should invest in it.
Yeah. It's too shaky.
It is. You can't. It's not backed by anything. I know that at least the government says the greenback, is backed by the full faith of the United States.
Yeah.
But I don't know what all these other cryptocurrencies are backed by. It's not
Exactly.
backed by anything.
Exactly.
Just
And people are making money from it. I know several people that invested and it's gone up 10 times, but it's like, okay, maybe we're more conservative. We've been around longer because it's younger people doing that.
Yeah, and the thing is, if you listen, I don't begrudge anybody a profit who believed in it and bought in early and sold. In fact, it's so funny because years ago, when Bitcoin was still on the early stages, Mark Hanf and I were still talking about, what, we're not believers, and we got an email from one guy saying, "You guys are idiots. Bitcoin's going to go to 25,000 or something," and we just said, well, we don't think so, but who knows? And boy, he was right, and we were wrong.
Yeah.
And that's okay.
I'm wrong all day long, but
I don't have any ego about this. I've got no problem saying, you know what, I missed it. I didn't see that one coming. But it's okay. I mean, what do they say? You can't get hurt not taking a profit, right?
That's right.
It's when you lose money that you get smoked. And so, what's going to happen? Here it hit 60,000, and then now it's at like 49,000. So if those people bought it at 60, I don't know, maybe it will go to 100, but maybe it won't.
Maybe it won't.
And I won't know when to get out.
exactly.
And here's the other question: is how easy is it to get out? I don't know, right? I mean, it might be such a thin market, that sure you can buy all you want, you just can't sell.
Yeah. No,
Yeah.
exactly. That's a really big point. And so far it's going nice, and that's when everybody's, all happy and dancing. But we don't know the future on that. I don't have the energy to really
There you go. I don't
get
have the
out.
energy or the stomach for
Yes,
it.
yes, yes.
Yeah, that's the other
Exactly.
reason about not doing it. Okay. If you are ready, we're going to go to our second trivia question here.
Great.
Mary, Queen of Scots, was an avid fan and participant of what sport? And cutting off people's heads does not count as a
I
sport.
know that's what I was thinking. I'm like,
Yeah.
that's a sport.
Yeah.
Yeah.
Was Mary quite contrary? How do your such in cockle shells and blah, blah, blah. That was all about Mary. But anyway, so that's our trivia question. Mary, Queen of Scots, was an avid fan and participant of what sport? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Don't touch that dial. When we come back, I'm going to tell you about a deal of the week. All right, stay with us. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Patty Cohen of Pacific. It's so funny. I'm so used to saying Mark Hoff and Nam Phan, who aren't here today, of Pacific Private Money, but Patty Cohen of Compass Realty. All right, our second trivia question was Mary, Queen of Scots, was an avid fan and participant of what sport?
I don't know.
Golf.
Golf, really
Yeah,
cool.
yeah. It must. I think
God.
it started about 100 years before her, and it's funny because the King of England at some point had outlawed golf because he said it took away from the archers practicing their archery because they were out on the links.
Wow.
Sounds like a typical doctor on Wednesday, huh?
Yeah, exactly.
Remember,
Exactly.
Wednesday used to be golf day.
Yeah.
All right, so I'm going to share with you a deal of the week that we just got actually. So there's a woman. She's got $4 million in her stock brokerage account, which is liquid.
Yeah.
She's buying a house for $2 million. She's putting down $800,000. So she is looking for a loan, actually a little more than $800,000, and so she needs a little under $1.2 million as a first mortgage. Property's worth $2 million, so that's fine. 60% loan to value. The thing is, she also wants to put an additional $1 million into the property to improve it. Add on square footage and all that. It's not like it's a fixer-upper, right?
Yeah.
And actually, she isn't going to live there. She plans to flip it. So, it's kind of interesting, kind of an expensive flip, but I think she must find some value in there.
Wow. Flipping is tricky. Yeah.
Yeah, it is. I mean, it's an expensive property. And so the question, it comes up, well, gosh, why would she need a loan? I mean, she could just pay cash for all this.
Right.
Well, she wants to conserve her cash, because she knows it's going to take roughly, again, $800,000+ of her own money, plus an additional $1 million to improve it, which if it takes $1 million, it's probably going to be cost overruns. She wants a cushion to make sure that she can make her mortgage payments, and it's not her personal residence. So, there's some risks involved on that. But from our standpoint, or Pacific Private Money standpoint, we're talking about a loan of 60% loan to value with someone who's pretty wealthy. So there you go. Now on a deal like this, the investor is going to earn over the company, let's say, is going to earn over 8%. Now, how many investments do you know are that secure that you can earn over 8%?
No, they're not out there.
Not too many.
Yeah.
Exactly. And so
You can make it in the stock market. They can argue that,
Yeah,
but you usually don't.
Well, and you can lose on that, right? I mean, on this one, you could lose, but you're talking about a property that is purchased for $2 million. That's going to have an extra $1 million put in.
Yeah.
And assuming that she's not going to do something crazy with the $1 million,
right.
with a
Nobody's
very
walking
conservative loan
away.
to value. Yeah.
Exactly.
So a lot of people listen to this kind of story and they go, well, that sounds pretty good. How do I get to participate in that? And the way is that Pacific Private Money has a fund. They have a couple of different funds. The main fund is a $62 million fund where you can invest as little as $50,000. You have to be an accredited investor, which means you have to be worth at least $1 million exclusive of your home, or you make 200,000 a year if you're single, 300,000 if you're married.
Mm.
There's no fee to get in, no fee to get out. Everybody loves the no load part. The minimum requirement though is you got to stay in for a year. Well, how fast does a year go?
It does.
Very fast. So this is not an investment that somebody wants to put in and take out in a month.
Yeah.
But after a year, they can ask for their money back at any time.
And most people don't, unless they really
No,
need it.
unless they
But
need
they're
it.
going, where else can I get this kind of money?
Correct. So they're using it like sort of like a delayed money market, I guess is the way to do it. Because anytime anybody's wanted their money, they have to give like 30 or 60 days notice, which is not bad.
Yeah.
And then they get all their principal back. And for that, the company is paying a minimum preferred return of 7% plus a little bit of profit. So you get about 7.25%, 7.5%. And so far to date, no investors lost money. So that's a good thing.
Yeah.
And for more information, you can call 415-883-2150 or go to pacificprivatemoney.com or send an email to investor.relations@pacificprivatemoney.com. It's kind of interesting because, on one end, they're just like a real estate lending bank in a way, right?
Yeah.
And then from the investor standpoint, it's similar to a mutual fund in that you invest in the fund goes ahead and makes the loans, and you own a number of shares, but they don't get traded like the stock market. So you don't have to be too concerned about your principal. I mean, I like the fact that I don't have to look in the paper every day and go, close my eyes. Did I make money? Did I lose money?
I know.
It's just, you just get a steady check.
It's such a no-brainer to me. It is such a no-brainer. I totally believe in it.
Yeah,
and I have no axe to grind here either way.
No, I mean, you own real estate, so you know the business.
Yeah.
Anyway.
Yeah.
So again, check out pacificprivatemoney.com. Patty, we've got about a minute and a half before we get to another break. Tell us a fun story. Can you do that in about a minute?
Sure. I mean, honestly, I met a buyer in December. They said, yeah, I can go up to $1.6 million. This is what I'm looking for. We might not have kids, don't need 2-bedroom. Talked to him again in March, and he's like, he had an agent, right? So lost out, bloody so many times, just didn't get anywhere making offers.
Yeah.
We'll go up to 2.2. It doesn't, 2 bedrooms is fine. It doesn't even have to have a garage.
Wow.
I don't even need to be in the flats of Mill Valley or close to town like everybody wants to be.
Yeah.
Way up in the hills in Panoramic in Mill Valley or Christmas Tree Hill in Corte Madera.
Wow.
Fine with us. So I said, okay, because I'm pretty selective about what buyers I work with right now, but sellers all day long. But anyway, in my networking group, the very next day, I found a property that was listed, not even on the market yet, listed at 1,599. The very next day I showed it to them. I was just talking to him at the time. Anyway, before we even saw the house, they were saying, how much over do you think we should go? Do you think we should go like an 8? And I said, I think we should see the house and you see if you like it.
Sure.
Like the old fashioned way.
Yeah, exactly.
So before we go, we saw it before we got out the door. They wanted to bid 1,920.
Wow.
And I said, no way. Your market is very limited. You've got 2 bedrooms, you don't have a garage, you have steps going up, you're way up in the hill.
Yeah.
I would go 1,750. And it was a fight. He goes, I don't want to go less than 1.8. Anyway, 1,770 in escrow, closing on Monday. Now, if you don't have an agent that really understands like how wide is the market for that house, but I saved them $150,000.
Exactly. I mean, that was awesome. And the seller's the one who pays the commission anyway, so it's not like they had to do it. Well, that's a great story. That's a great story. Tell you what, we don't have time for our trivia question. We'll ask that next time. That's okay. All right, stay with us. The Best of Investing. We'll be right back.
Oh, I thought we were going.
Welcome back to The Best of Investing. One more time, I'm Edward Brown, your host, along with Patty Cohen. Both Mark Confident and Nam Phan of Pacific Private Money are off today. We're going to save our trivia question for the next segment here. Interestingly enough, wanted to make sort of a mini announcement here. Starting June 1st, Pacific Private Money, one of the funds they have is called the Pacific Southwest Note Fund, of which actually I'm one of the managers. And what we're doing is we were paying a 9% return plus. We didn't know how profitable we were going to be. And as it turns out, we were paying over 9%. Now that the expenses are kind of settled in a little bit more and it's getting a little bit more challenging to, we can't sustain, let's put it this way, a 9+% rate of return. However, we can affix 7.5% fixed. And one of the reasons is that because we're buying discounted seller carryback notes in Texas, very specialized, it's very difficult for the accountants to figure out from month to month to month what is the profit, because you have what they call accretion of the discount every month. And then what happens when a borrower pays a little bit more principal? It's like you have to redo the calculations. So the downside was the fact that it took a really long time to make a distribution, and it was always like a month behind. And that's just not fair to investors. So one way to do it is to say, you know what, we don't care what it is, you're going to get the first 7.5%. So it's not, quote, guaranteed, but it's pretty darn close.
Yes.
Right? And the rest of it goes to the managers. And that's fine, because you're giving up one thing for the other, but it's going to be a lot more secure by getting the 7.5% right off the top.
Yeah.
So to speak, right? I mean, there'll be some ancillary expenses ahead of time, but it's before the manager gets a, quote, manager fee.
Yeah.
You know? So anyway, but here's the funny thing. It's such a popular fund that right now there's a waiting list. So so what we're doing is we're taking reservations. The main reason for that is trying to find the inventory that fits the criteria is harder than just making a regular loan, because there's a lot more due diligence that goes involved with someone who sold their house 5 years ago, is carrying back the note. And now we have to double check to make sure, A, do you own the property? B, prove to us that all those payments have been made. Go through title insurance. And also the dollar amounts are a lot smaller. So I'll give you an example.
Very intense.
Yeah, it's actually kind of cool. So we just bought one today. The property got what they call a BPO, broker price opinion, of $118,000. Again, we're talking Texas, not California. But it's reasonably priced. It's about 30 miles outside of Austin, Texas. Everyone's heard of Austin, okay? Which Texas is kind of very busy. I don't want to say the word on fire, but it's very, very busy. It's doing very, very well as a state.
Very.
So the property's worth $118,000, and the original note was $75,000 because the borrower had put down 10 or 15. I can't remember how much, but the note is 7 years old. It's got another 13 years to go. It was a 20-year note. And the discounted purchase price is $28,000. Wow. So we're buying this note at $28,000 on a property that's worth $118,000.
Wow.
So one would look at and say, that's a pretty conservative value. I mean, you were talking about 26% loan to value.
Yeah.
So the odds of losing on something like that are really small. And that's the whole thing. When you're always looking at risk, you got to look at alternatives and say, well, if I don't invest in this, I invest in something else, but what's the risk?
Right.
When you have something that's such a low loan to value that we're able to, easily pay 7.5%, and the yield was, the note was written at a 7% yield. But because we're buying it at a discount, our yield is higher. So we can easily afford to pay 7.5%. Right?
Wow.
The nice part about it too, $50,000 minimum, no fee to get in, no fee to get out. That one does not have a 1-year hold. We just ask for a 30-day written notice if you want to get out. So you can almost treat that like a money market fund. So if everything is all good. But again, the downside is there's a waiting list. So what we're doing is we're asking people if they're interested to send an email to investor.relations@pacificprivatemoney.com, and just say, hey, I might potentially, it's because it's a non-binding reservation. I might potentially be
Yeah.
interested
In
in
this lifetime.
investing X amount of dollars when it's available. And
All
then
right, tell me that again. I'm writing that down. I'm going to write the
yeah,
down.
just put it. It's non-binding. It doesn't cost you
Yeah,
anything because
yeah.
you're not
I'm on the list. I'm serious. What is that again?
investor
Uh-huh.
dot relations
Okay.
at pacificprivatemoney.com and just say, hi, my name is Joe Blow or whatever. Here's my email address and my phone number. And I might be interested in investing X amount of dollars. Let us know how much.
Yeah.
And then when the time comes where we've gone through the list and we're ready to come to you, we'll call you up or email you and say, hey, by the way, you're next on the list. Are you still interested? And if you're not, just say, sorry, not interested anymore. And
I
we'll
might
go on to the next
potentially
person.
be staying on the list.
Yeah, exactly. So it's literally no risk to put in a non-binding reservation, but at least you want to get on the list.
Yes,
Right?
yes.
Because if you call us 6 months from now and say, okay, I think I'm ready, you go, okay, well, now take a number in the back of the line.
Yeah.
So anyway, it's been very, it's a very expensive fund to run
Mhm.
because what we're doing is we're soliciting potential, we're soliciting sellers who have these notes
Yeah.
versus on regular Pacific private money funds, California deals, brokers are calling us and saying, hey, we have a client who needs money. So this one, we're actually spending a lot of money in the marketing side of things.
Oh, yeah. I mean, anytime you're dealing directly with the public individuals and they've got questions and education and the whole thing, and then you have to figure out the risk and the whole thing. Yeah.
Yeah, exactly. You do all the due diligence. And then also, even if the seller says, okay, I'll accept your offer of $28,000. I mean, it took, in this case, I think we started working on this 2 months ago. And it took the person that long to finally send the paperwork.
Oh, my
To say,
God.
okay, here, okay, I know we agreed on it, but I'm not sending the paperwork yet. I want my attorney to review it, or it's sitting on my kitchen table, whatever. So,
Yeah.
that's why it takes so long. But once we have it in the queue, and we've got it locked down,
Yeah.
we're going to be getting interest for the next 13 years on this loan, or if they pay us off early by selling the house, refinancing, or hitting the lottery,
Yeah.
we'll actually end up making more money because we're capturing the discount sooner.
Yeah. Yeah. Yeah.
So,
That's
so
right.
it's a very easy way for us to pay 7.5% fixed.
I
All right,
love it.
here is our last trivia question. Now this one you'll know. What poisonous concoction was Socrates given to drink to carry out his death sentence?
Ooh.
Come on, you know this one.
Cyanide or something?
Call, don't say it yet. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Again, here's the trivia question. What poisonous concoction was Socrates given to drink to carry out his death sentence? All right, stay with us. The Best of Investing will be right back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my co-host, Patty Cohen. Next week, Mark Hanf and Nam Phan will hopefully be with us. Third trivia question. What poisonous concoction was Socrates given to drink to carry out his death sentence?
I don't know. Cyanide? I don't know.
No. Hemlock.
Oh.
Remember hemlock? Yeah, whenever you think of Socrates, think of hemlock.
Okay.
And who was Socrates' protege? Plato.
Oh, Plato.
And who was Plato's protege? Aristotle.
Oh, yeah, right.
There you go. See, I still remember my philosophy class from 1979, if you can believe that. I don't know why.
That's amazing.
I mean, it's about the only thing I remember. Okay, Patty, and before we cut out, we got to remember to let people know how to get a hold of you. I mean, look at that. You saved that buyer $100 and some odd thousand because,
150,000.
yep, because you knew ahead of time that they did not need to overbid as much for this property. I mean, they must have been just totally pleased with you.
Yeah, I mean, usually the struggles go in the other direction. You have to go higher.
Yeah.
But lately I've been advising buyers, no, you can go lower. I promise you can. Because you're taking a risk. Because once the seller's turned off, it's over. Or you just get one shot. Anyway,
Gotcha. Okay.
but so I love, love, love what I do. I'm Patty Cohn. I'm a real estate broker for 32 years. I'm based in Marin County. I'm with Compass, and my phone number is 415-722-4842. And email is Patty, P-A-T-T-I .Cohn, C-O-H-N, @compass.com.
And even if people aren't, necessarily in Marin, you're kind of a wealth of knowledge, and you love helping people.
Yeah.
So
do.
people, you just anywhere in the Bay Area or even out of the Bay Area, I bet people call you.
Yeah, I'm happy to help people. And here's just a little, circling back from what we talked about earlier, I
Yeah.
wanted to add one more thing.
Sure.
Like when you were talking about how long it was taking to get your,
Oh, my loan. Yeah.
3 months and you know what you're doing. Now, you're an exception to what I'm about to say because you
Right.
know how to package a loan.
Yeah.
That being said, almost all of the time you are much better off going through a loan broker.
Yeah.
Because
Sure.
it's going to take you 30 to 40 days. You might have better pricing, believe it or not, even though the bank has to pay them.
Yeah.
And you're going to be counseled on how to package that loan.
True.
You could make some mistakes if you don't package it correctly.
Yeah, but also, sometimes the loan broker can get a faster response than the client when dealing
Oh.
with the institution, the bank, or whoever.
Sometimes.
Yeah.
Believe it or not, the mortgage broker can get a better response than the guy sitting in the branch, because the guy sitting in the branch, I'm so sorry to say, is usually not very competent. And that's why it takes 90 days, 6 months. People wait. Like, don't do that. Use a loan broker.
Yeah.
Yeah.
And it's interesting too, because sometimes an inexperienced mortgage broker will end up getting deals because of that. The mortgage broker didn't do the right thing, and the time is running short, and now they've got 10 days to close their deal, and it's a slam dunk deal, but the broker messed up, and so we end up getting the deal at Pacific Private Money.
There you go.
Again, go to pacificprivatemoney.com for more questions. Email is best, investor.relations@pacificprivatemoney.com, whether you need a loan or whether you're interested in investing in any of the funds. They also have a construction loan fund.
Oh, really?
Yeah, it's called North Star Capital. It's been around for almost a year. That has an 8% preferred return, pays quarterly, and that one does have a $100,000 minimum, and you do have to hold on to it for a year.
Yeah.
But other than that, it's a construction loan fund. All right, are you ready for our thoughts for the day? Boy, this is fast, isn't it?
So fast. We got to do this today. Yeah.
Okay, these are a little bit of puns, I guess. So, how does the moon cut his hair? Eclipse it.
Eclipse it.
Eclipse it. And my wife told me to take a spider out instead of killing it. We went out and had a few beers. Cool guy, very driven, wants to be a web designer. I thought that was pretty good. All right, you like that? All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best
of investing.
So long.